This is another episode of me trading smart, managing risk while learning how to trade effectively. Thank you at MetaShackle for making that adjustment in my intro to the video. Now, I would say this is another episode of me sticking my nose into the charts until I discover a trade model that makes millions and millions of dollars, but he is right. MetaShackle is completely right. That is not the purpose of this, okay? We are supposed to be process-oriented traders, and we are supposed to be focusing on following our rules, following our trade model, doing what we're supposed to be doing, and avoiding what we know we should not do. And in today's session, I did what I know I should not do. And so I just reinforced the lesson that I already knew. So let's get into it. And also, if you leave a comment on my video, I'm going to respond to it. So if you ever want to reach out to me or, I don't know, conversate about trading or anything, leave a comment. I'll respond. You can also follow me on Instagram. Link is in my bio. And I also have a Discord community if you're interested in that as well. It's free, of course. I'm not charging anything. And let's get into it. All right. So let's throw the executions on the chart and let's talk about it. What went wrong today? And I'm not connected to my broker, so let me do that. Paper trade. There we go. Connect. Okay. Boom. All right. So we had one trade today. It was a short position. Executed at 8:41 in the morning and obviously got stopped out really, really fast. Okay. So let's talk about this. First of all, in the higher time frame, we can see that literally from the open of today's range at 6 p.m., which is right here, right? Here's our new day opening gap. Boom, this thing immediately starts rallying. It just takes off. It's in liftoff mode. So a rule of engagement that I built for myself is that if there is a large one-sided move overnight, which we see here, then my immediate protocol is to not trade the first 20 minutes market open. I want to wait for that first element of time. And I don't want to engage at all before 9:30 because I know that the price action is going to be fickle. And really, it was. I mean, if you look at these ranges, well, for the most part, yeah. It's just simply not something that I want to engage in. We can see the ranges here. They're small, wicky. We do see some volatility start to come into the market, but the trade that I took did not make sense at all because the move was clearly and obviously one-sided. And I was simply trying to call a top on that. And it was not the right time of day to frame a reversal and fade this move. So from what I've noticed through forward testing is that from 7 o'clock in the morning to 9:30, I really do not want to be trying to fade what is already in motion. I want to look for something to get in sync with that. And then after 9:30, that is when I can look to fade that. So usually from 7 o'clock to 9:30, we'll have a run in one direction, right? It's reaching for something, reaching for some higher time frame objective. And then after 9:30, that is when the objective is reached, and then we can look to fade that move that occurred before then from 7 o'clock to 9:30. And this is what we see here, right? Right at 9:30, we immediately start fading what took place before then. So this is usually what happens. That's a normal characteristic within the daily range. So between 7 o'clock and really 8 o'clock, 8:15, I want to look to get on side with what is already in motion. Now here, I was trying to call a top, which goes against that. And that violates my rule, and that violates my protocol for how I want to approach the day's trading. So, I mean, it's really just a simple mistake, but I'll outline what I saw here. And this just reinforces a rule that I already had in place. Like I had that rule in place, but I never violated it. Today I violated it for the first time. And it's just a reminder, another good lesson as to why I have that rule in the first place, right? So let me mark this minor buy side liquidity. And what I saw was on the news, initially what did we do? We traded lower, traded higher. We ran the buy side liquidity, right? We have 3 consecutive drives above an old high. We have 1 drive here, 2 drives, 3 drives, right? So I was like, okay, we have a 3 drive pattern into a pool of buy side liquidity. This is the high a day. Okay. And then I dropped a fib on this wick. I was studying consequent encroachment right there. And I liked how the bodies of the candles were closing below consequent encroachment. That's an indication of weakness. And then boom, displacement off of that, right? We have a fair value gap. And I was looking to sell short right up into that fair value gap. So we take out a short-term low here, although we do leave this low intact. So I'm watching this fair value gap right here. And really, there's a volume imbalance up there. So this fair value gap would go, what is going on? Something like this. Okay. And I was looking to sell short back up into this fair value gap in the order block right here because we close over the open price of this order block. That's a change in the state of delivery. And I was looking to sell short here based on what I saw, seeing that reaction at these highs, right? It's getting very jagged down here. And I thought it was likely that we'd come trade lower and attack this sell side liquidity below the marketplace. So I was aiming for that. After seeing this, I thought this was a good valid condition in the marketplace for me to look to sell. But what am I doing? It's not the right time of day for me to look to fade what is already in motion. From 7 o'clock to 9:30, that's when I can just expect whatever's in motion to keep playing out until it reaches a terminus, until it reaches its objective. And then 9:30, after 9:30, that is when I can look to fade that. That's what we see today. And that's my usual protocol on how I want to approach the day. But I violated that here. And while this was happening, look at this. So we have this imbalance below the marketplace, and I was selling short right up into that. So that is not a valid trade condition in the marketplace, right? Because look how we trade down to consequent encroachment, and the bodies stop right at it. So the bodies are still coloring inside the upper quadrant of this buy side imbalance, sell side efficiency. That indicates strength, even though I'm looking to sell short here. And primarily, the market has been entirely one-sided. Okay, so, I mean, if I see this kind of price action, then that's not something that I want to fade. That tells me that the narrative is still in motion. What's already been going on for the entire daily range so far is still in place, and I don't want to fade that. Now, I completely had this imbalance left off the chart, which leads to an important lesson that I learned today is that I simply want to annotate whatever's in motion, whatever narrative is in play, then I want to annotate all the PD arrays in that. Like, for example, we have price is bullish here, right? So I just want to annotate literally every fair value gap, every order block, because look what happens here, right? We even trade down to the open price of the order block, and we're respecting this buy side imbalance, sell side inefficiency, respecting consequent encroachment. So if I had this annotated on my chart and I saw price respecting it like this, then that would invalidate this trade idea entirely. Because why would I look to sell short when I see this kind of price action below and the market is one-sided the entire daily range, you know? So I think doing this will prevent me from taking a lot of losing trades. And then it'll also tell me when something is in play, because if I annotate these PD arrays, but then they begin to fail and they get inversed, and then they are then used as a premium array, then that tells me I have a valid condition in the marketplace to look to fade the move. But until then, whatever's in motion will continue to be in motion. So that is a lesson that I learned today, and that's something that I'm going to practice throughout the rest of my development. I'm going to continue to do that. And then 9:30, what I was looking for in the daily range, because we were so one-sided overnight, and it was very similar to what occurred last Thursday. If I go back to last Thursday, it looked a lot like this, right? But the difference between last Thursday and today is that this market wasn't trading into a higher time frame point of interest. I don't remember what we were reaching into, but I don't think it was reaching into some significant premium array. Like in today's market, it's one-sided, trades higher, but look what it reaches up into. If we zoom out to the daily, and let me remove these, we can see that we trade up into this daily sell side imbalance, buy side inefficiency. And look how we're trading right now. See, the market's still open, this candle's still open, but see how we failed to reach consequent encroachment with the daily sell side imbalance, buy side inefficiency? That is indicative of weakness. And if we go to the 15-minute time frame, at the high of day, at the 9:30 open, we see a smart money reversal. We have this really clean breaker formation. We have a high, a low, a higher high, and a lower low. Look how that 9:30 candle closes, leaves this imbalance, and look how price never reaches back up into that imbalance. So if price can't even reprice to this imbalance, that indicates that it is very heavy and it is aggressively pricing towards some objective below the marketplace. So initially what I was thinking was we'd drop down lower at 9:30, accumulate underneath this pool of sell side liquidity, and then trade higher. but that's not the case because we're trading into that higher time frame PD array. So learned a lesson there, gained some market experience there. What I anticipated for the daily range did not play out at all, although I read that that was not likely to occur, and I kind of adapted to that information, and I was going to look to sell short, but I literally froze up facing anxiety. So I was looking to sell short, was scared to pull the trigger because I felt anxiety. So I want to highlight how once we left this daily sell side imbalance, buy side inefficiency, look how this candle opens, trades back up into the low, right? Wicks off of it, and then boom, accelerates lower. So it runs an extra 200 handles after reacting off of the low of that daily sell side imbalance, buy side inefficiency, which is exactly what you want to see. See, once we leave the daily imbalance here, we wouldn't want to see this get traded back up into this gap right here. We'd want to see it stay open because that would indicate weakness. And then once we leave the imbalance, open here, trade back up into it, wick off of it, and then boom, accelerate lower. That's exactly what you would want to see. So today is a perfect example of the price continuum delivery theory on how we work from the higher time frames down to the lower time frames. See, on the daily chart, it looks like this, right? We just have a large upper wick, go down to the 50-minute time frame, and we can see everything that's going on behind the scenes. We have smart money reversal. This gap we want to stay open because we're leaving that sell side imbalance, buy side inefficiency. This opens here, trades up into the low, boom, accelerates lower. So because I was looking for a long setup here, I outlined this 4-hour buy side imbalance, sell side inefficiency that had not been traded to yet. And I thought maybe we could see a reversal here. So dropping down to the 1-minute time frame, I knew it was not likely that we were going to see a reversal here because look how we trade to that 4-hour imbalance. You notice how we trade down into it, and when the market just spends a lot of time here. So whenever we see price spending a lot of time inside of an imbalance, that is a good indication that it's not going to hold up. It's not going to work because we only want to see 1 to 2 candles inside of an imbalance. We want to see it boom, move out of it, accelerate out of it with speed, just like that. We don't want to see it spend any time in that inefficiency at all. Like right here, right? This is a perfect reaction to an imbalance. So just inverse this logic, and that's how you'd want to see it, this 4-hour imbalance behave. But notice how we have 1, 2 candles, boom, accelerate out of it, right? Now here, notice how we just boom, 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 boom. Like we kind of just hang around. We spend a lot of time here. We don't see any kind of reaction. There's no speed off of it. There's no acceleration off of it. We just hang around. And then we trade lower through it. And then here's where I was looking to sell short, but I literally froze up out of anxiety because I'm reading all this information. Okay. I'm studying. I started annotating the lesson that I stated earlier that I learned when I just simply want to annotate what's in motion. I did that here, and I was just annotating the order blocks and the imbalances that I saw because I was looking for a long. And in order for me to get long, I had to see these imbalances become inversed, but they never did, and the order flow remained heavy. So that told me that there is no long in play here, which is why I never got long. So doing this will also prevent you from taking losing trades because you have to see those imbalances on the left side of the curve inverse, but they never did. So I don't have a long. And there you go. So notice how we trade up into this order block here. We have an inefficiency here as well, but we color outside the lines because we're reaching into the low of that breaker. That last down close candle. Also the order block, but do we ever close above mean threshold? No. So what does that indicate? Weakness. We have this imbalance here, colors outside the lines because we're reaching up into this order block. Displacement, market structure shift, or not a market structure shift because it's high, low, higher, high, lower, low. It's still bearish, right? We're continuously putting in lower lows and lower highs. So that is an indication that this thing is heavy and the market is in a sell program, aggressively seeking an objective below the marketplace. It's something that I've kind of learned about market maker models. But we have this imbalance here, trade up into it. We open here, wick up into it, close below it. Same thing here, open, trade up into the upper quadrant, close below it. This is the algorithmic signature that you want to see to indicate that this thing is heavy and it's going to start spooling lower, start repricing lower. We wick into it, but we can't even close inside of it. So that's the algorithm literally telling us, hey, I'm heavy and I'm going lower. Then we have this fair value gap right here. Initially, we trade through it, treat it as a reclaimed fair value gap. Notice how these candles open, trade up into it. Let's study consequent encroachment. Look at the reaction off of consequent encroachment. Boom, boom, 2 times. Get that off. And notice how we also wick off mean threshold of this order block right here. So if you drop a fib on this, boom, right there, right? So I'm just reading all this intel. I'm reading the order flow. It's clearly weak. It's clearly heavy. Okay. I'm not looking for a long here. And then notice how once we leave that daily imbalance, even on the 1 minute time frame, look how we're trading back up into it. Look how we're waking off of it right here. So even if I didn't get an entry here, or here, or here, I have 2 other chances to get short, knowing that this thing is heavy. Reading this order flow, it's clearly heavy. Consistently putting in lower lows and lower highs. Did I say higher highs and higher lows earlier? Lower lows and lower highs. That's what I meant. Sorry. So this thing is clearly heavy. It's clearly in a sell program, and it is not interested in buy side liquidity above. And notice how at the 9:30 open, it's the same thing across all time frames, right? We leave this imbalance open. That is a signature. I'm heavy. I'm going lower. That's what it's telling you. We'd never even trade up to the first presented fair value gap. What does that tell you? I'm heavy. I'm going lower. Okay, so this is where I was looking to sell short because I was studying this imbalance here. After we left that daily SIBI, we trade back up into the low. I noticed how this candle traded up into it and closed below. We also wicked off the open price at the order block. Boom, perfect, right? This candle opens. Well, I noticed this candle closed below it, so I dropped a fib on this candle. I got the consequent encroachment of that. And then I wanted to study it and see if this candle can trade up to consequent encroachment and look for a selling opportunity on this candle, but it never did. So what does that indicate? Weakness. If it can't even trade up to the midpoint of this wick, this premium wick, that indicates weakness. And then it fell short and rolled over. So I was looking to sell short here and also on the 5-minute time frame. We have a bearish order block. So I was reading that on the 1 minute, looking at my 5-minute chart that I have up here on this screen. It was also trading back up into the 5-minute order block. Boom, hammers that perfectly, right? And then rolls over. But I talked myself out of it. I said, no, we're way too deep down in a discount. We're below old lows. I don't want to sell short here. But the order flow is clearly extremely heavy. And as I was reading this too, I zoomed out a bit and I thought, okay, what are we seeing happen? Because I noticed this reaction out of the daily SIBI. So what I really wanted to see is, do we trade underneath this pool of sell side liquidity and then trade higher and run through the SIBI? Or is this the high of day? Do we actually see a smart money reversal and we distribute lower? So what this looked like to me was a market maker sell model in the moment. We have this consolidation range here. So we have buy side liquidity above these highs, sell side liquidity below these lows. Initially, we trade higher and take the buy side. So what's next? The sell side. And if we continue to look below the marketplace, we have a little period of consolidation here. So there's your original consolidation. We have more consolidation here. And we have more consolidation here. So these are all targets where we have sell side liquidity resting below these smooth, clean, equal lows, and the market digs down into all of them. So this is just one big, giant, fat market maker sell model with a smart money reversal occurring inside of that daily sell side imbalance, buy side inefficiency. So today I just gained a lot of market experience. The 9:30 move was not a Judas swing because of where the market opened, right? It opened inside of that daily SIBI, failed to reach consequent encroachment. And the smart money reversal is very clear. It's very obvious, and you can see it on all time frames. We have a breaker. Go to the 5-minute. The 5-minute tells you the same thing, right? Look at all these fair value, these imbalances that we inverse. Boom, boom, boom. Get over those. Notice how we open here, trade up. Boom, hit the order block, hit the low of the breaker. So, I mean, we do this on the 5-minute and the 1 minute. We open here, trade higher, hit the low of the order block, or the open price of the order block and the low of the breaker. And it's the same thing on the 1 minute. Like this can be refined all the way down to the 1 minute. There's that very last down close candle before the turn. Extend that out in time. Look how the bodies close inside of it. There's that 5-minute order block, how we open here, trade up, wick into it, wick into the low of the breaker. And I think even if we drop a midpoint on this, look at the bodies closing right at the mean threshold of that. So if we are bearish, we'd want to see the bodies of the candles close in the lower half of premium arrays. And it does so perfectly, beautifully. So the order flow is clearly heavy, clearly weak. And it's going to seek all those points of consolidation where there's very clean, smooth lows resting below, like here, like here, and here, right? So you can see it from the 15-minute all the way down to the 1 minute. So it's very clear, very obvious on all time frames. And that's where I was looking to sell short, but I froze up. I hesitated. That's fine. I learned from it. Learned a lot about market maker models today. I've kind of been not really experimenting them, literally just watching them play out and understanding this is what the market does. Because yesterday's move was not a Judas swing at all either, because it was reaching for something. And today's move was not a Judas swing either, because we opened in this higher time frame premium array, and we immediately started reaching for all the sell side liquidity below. So crazy move, crazy move. So yeah, I missed it. That's fine. It's going to happen again tomorrow and the day after and the day after and the day after. But yeah, yesterday's move was not a Judas swing either, because we opened and we were immediately started reaching for a large pool of buy side liquidity on the daily time frame, as well as the previous day high. So 930 is not always a fake move. Sometimes it's the real move. But it just depends on, are we on the buy side of the curve right now, or are we on the sell side of the curve? And where is the terminus of this move? So that's a crucial lesson that I've learned watching these market maker models play out, is what is it reaching for? You have to know what it's reaching for, because it's not valid to fade that move until it reaches its terminus. Like right here, this is a buy model, right? You don't want to fade this until it reaches the terminus. What is the terminus? That daily SIBI. And then once it reaches the daily SIBI, we see it fail to reach consequent encroachment, and we see a smart money reversal, and we leave that, then it is valid to fade the market and drop down all the way to the 1 minute. You can read the order flow, read that it's heavy, but then you also have to determine, okay, what is this move reaching for? Well, you have to go find your pools of liquidity. And that's going to be, you're going to look for perfect little boxes of price action, like right here and right here, right? We have a perfect little consolidation range right here, where we leave very clean relative equal lows, and then we just trade higher. So this is literally how market maker models work. Every single time you see a range, it'll take one side and then it defers to the other. But when it takes one side, it reaches an objective, then we have to look for a smart money reversal. Then we can anticipate it to draw to the other side. So I didn't see this large of a move coming at all. Like initially I said I was long on the day, and I was looking for a long in here, but new information suggested otherwise. And I read that and I was like, okay, well, I'm going to look for a short. Froze up, thought I was selling too short into a discount, so I never pulled the trigger, and it ended up playing out, which is fine. I started demo trading ICT last Tuesday. It is now Thursday. So it's been a little bit over a week. It hasn't been 2 weeks yet. It hasn't even been 2 weeks yet. And if we pull up the statistics, if I go demo trading, I have 12 incorrect trades and I have 1 correct. So obviously going through the learning curve right now. I'm sure a lot of you are as well, because most people that watch my channel are new traders. Just understand that, I mean, this part of the process is necessary. You got to go through this phase. You have to, get it all wrong in the beginning so you know what to do right. And that's the whole point of this process. Now, what I'm going to do today, ICT didn't live stream today, so now I have more time to myself to actually be able to go back and study all these losing trades, do some back testing, refine my trade model, know what I'm looking for, and just practice. Just practice, getting these reps and really defining that model, knowing exactly what I'm looking for, knowing exactly when not to do something, when to do something. And that's about it. So that's it for this one. I'll see you next time.